Good morning, everyone. Welcome to our Thursday morning trading room. Just a moment here. Got the screen share working. Okay. Well, yesterday was a little bit of a surprise, wasn't it? Here, let's bring over the daily chart. Give us a little bit of a perspective. Oh, I see there's a couple new people in the room here, so let me just go over this and then I will tell you what it is you're looking at. While I think of it, I'm going to shoot a couple of trend lines here. So yesterday, during the morning, it was quite the seesaw. The market making a big move lower, making a big recovery, and I thought that was all we were going to see out of it. But no, the market making a very strong pushback right into the close, giving us a very, very bullish looking bar on the day. I'm wondering whether that is now going to be the retest of this breakout that we saw. If that's the retest and the market trying to head higher. I guess yesterday's highs and lows are going to be the deciding point for that. If we're going to trade above the highs, then it's reasonable to assume the market's going to continue higher. Certainly try to get back to 8,000, maybe even 8,100 back here to the contract highs. If we break the lows, next stop, well, you can see the two trend lines we got to deal with. One looking like somewhere around 7,600 and then maybe even 7,500. We shall see. All right. That's the daily NASDAQ chart. And for the benefit of the new people in the room, let me go over what it is you're looking at here. This is the complete diversified trading system along with the Raptor. Sorry, hold on here a second. I did something to my... There we go. Okay, so you got the complete diversified trading system along with the Raptor. Here in the top left is the Hawk Micro Scalper. The top right is the Falcon Swing Trader. The bottom left is the Eagle Trend Trader. And then the bottom right, most of you will recognize, is the Raptor. The markets I am following, or the market I am following, is the NASDAQ. That symbol is NQ. We're in the month of December right now, the contract month. But I would be happy to pull up other markets if you're interested in other markets. I will tell you, though, I've cut back on my data feed on some of the markets, so you may have to give me a couple days to add the feed if you're interested in something a little bit more unique. People often ask, why do you follow the NASDAQ instead of the E-mini? Because, of course, the E-mini is the big kid on the block. I'm not going to do it for you right now, but if you take the time and you compare moves in your NASDAQ chart and your E-mini chart. So let's say, I've never done it with an overnight move, but I'm sure it works the same. But let's say you're going to find an intraday move and compare the low to high on the, because you'll have a comparable move on both markets, the NASDAQ and the E-mini do move together. Compare the move on the NASDAQ, compare the move on the E-mini. And what most people don't realize is that even though the E-mini trades at $12.50 a tick and the NASDAQ trades at $5 a tick, the dollar amount of the move will be equivalent. So let's say, just for easy math, this is $1,000 move on the NASDAQ. It will also be $1,000 move on the E-mini. And you say, okay, so, well, at $5 a tick on the NASDAQ, that very often will mean that we can afford to trade more than one contract, especially if our account is a little bit bigger. Or if not that, we can leave a larger stop without risking more money, giving us a little bit more staying power. I think the NASDAQ is a pretty tough market to beat. There's most days decent volatility, decent size moves. You get the $5 tick. Okay, well, here we go out of the gate. Our first in sync signal here on the Eagle. I guess it occurred, well, you got two of them. It looks like they're within a few seconds of each other. The trading band is bearish. We get the sell signal, and down she goes. So your first in sync Eagle signal working very nicely today. Raptor traders, you can do the same thing. So what you're looking for is you're looking for your first in sync signal. So we've got the bands stacked in a bearish fashion. We have the soft edge below the hard edge. This means we're going to be looking for selling opportunities. So we're going to avoid the counter trend signal. And it looks like about a minute after the open, we get this hard edge bounce signal, this number 3 signal. That's your first in sync signal. That's your first signal to sell. And that one too, exceptional follow through. No problem whatsoever hitting your profit target there. We got some decent volatility going on here the last couple of days. Oh, and here we're coming now with a 232 signal. Do I dare try to buy it? Gosh, what time is it? We're 9 minutes in. All right, so this is probably going to stop me out. So why am I doing it? Well, because I'm stubborn. What we're looking at here is a 232 signal, which is a potential reversal signal. We got the counter trend signal, we have the with trend signal, we have another counter trend signal. Very often, and we have a rather broad trading band. The trading band was up to 64 ticks at this point. When the trading band gets broad like that, it does have a tendency to try to trade back toward the hard edge. I'm going to leave my exit order in as my with trend order in case the market does continue lower, which it will probably have a tendency to do. So let's get my profit order in there. Come on, work with me. What the heck. All right, we'll leave it for there. All right, come on now. You can do it. Oh, what am I doing? That's 10 ticks. I only want 5. There we go. That's better. Wow, they've stalled. So I'm going to take this opportunity to bring my trade to break even. they have installed. I haven't rolled my chart far enough ahead. Shoot. They kissed my profit target and then backed off and tagged me at break even. Scoundrels. This was one of those situations where, here, maybe it'll show up better on the Eagle. We have a rather obvious trend. Within every trend, there will be a point where the market hits this little bit of a sideways skid. Once that happens, get ready for your breakout with trend. 90% of the time, the market will continue out of this sideways range with trend. Let's see, we're back almost to the hard edge there. See, here's just another discretionary signal. I'm going to use a second push opportunity on this one. It's not a hard edge bounce, but visually it's close enough to count as a hard edge bounce. Oh, we're going to come back with a counter trend trade. There's going to be a number 2 signal printing here in a moment. Is it quarter to the hour? Ooh, it's awfully close. My least favorite time of the day to trade. Now that the market does seem to have a trend to it though, waiting on a pullback is an ideal opportunity to try to get in to a trade. Here now the number 2 signal, counter trend signal. I don't know if I want to get all that bullish just yet. The sellers putting the boots to the buyers here. So we'll see. We're in the hard edge. If we come back now with trend signal, a number 3 signal to short, I will certainly consider that. Oh, sorry folks, I forgot to mention here at the bottom is an add-on indicator. This is the Bollinger Band Suite from Indicator Warehouse. It's what we refer to as a system add-on. I featured it one Friday during our Rabbit Hole Fridays, and I liked it so much I left it on my charts, as you can see. Oh gosh. Okay, is this going to be an early trend change signal? I bet the Falcon already gave us a trend change signal. Oh, we're going to get a late filter entry signal here on the Falcon. So let me take a look at that. All right, so the late filter entry signal here in the Falcon is a signal that occurs when your filter goes out of sync, comes back into sync, your trend line never changing color. On the Raptor, we're going to have the early trend change signal, which I'll get to here in just a moment. Oh, come on, you guys. You got to give me a little bit of a push here. Oh, okay, well, now we're quarter to the hour. Okay, so we're down to the trend line. Now this should wake up some of the buyers. Nuts. Okay, I don't do this often, but I'm going to look to reverse on my position. Looks like I'm going to get tagged. Trend. Trend trumps all. Good question here. Ray's asking, Eric, my Raptor setting on my soft edge signal is 1.01. Is yours the same? You shouldn't do this while you're in an actual trade. You shouldn't fiddle around with your charts. Yes. Okay, so your soft edge parameters, signal parameters SE, that's your soft edge signal. That's your number 2 signal, the counter trend signal. By default, it is 1.01. If you want to make it a little bit more sensitive, pick up a few more signals. 1.25 seems to work pretty well. But feel free to experiment. See, we got into the hard edge, and as is often the case, once the market hits that hard edge, there's a little bit of a reaction to anticipate. Sure enough. Come on, buyers, get up there. All right, so when and if we breach this little swing high, I'm going to become a lot more aggressive with my stops. Okay, well, they're getting excited about something. I didn't check the reports calendar. I don't know if we have a report out today. I don't think so. I don't like that it's turned again at that 75, or pardon me, 77.86 zone. That is not good. We need just a little giddy up here from the buyers, but we've got ourselves quite the little sideways trading range going on now. It's looking something like that. All right. Bring my stops in a little and come on. Back to the hard edge again. Well, we know there's a ton of selling up at this 77.86 zone. If we can breach that, we're going to start tagging some of these sellers out. And to exit a sell order, of course, that's a buy order. So if we can see the market tick 77.86, 77.87, there could be a rather brisk move higher. Good call, Aspen. Aspen says it's sideways. I'm staying out. I got a little cute with the market, as I tend to do. All right, so I got tagged out. Hold on, I got to get an exit order in play. Cancel that. And since the market seems to be trending, I'm going to swing for the fences. I'm going to try to take it down here to the next support zone, which is rather ambitious, but I'll probably have to modify that. So we've got the sideways trading range. Now we've got the breakout. This is the retest. I reversed on the signal. I picked up on this number one signal to short, but what you could do is you could place an order to sell right below there. So if this retest holds, and the market will continue lower from here, somewhere around here, the market's going to make a reaction. As they test the breakout zone. And right now, this isn't looking very promising either. Well, come on, you guys. Play nice. Come on, you guys. Give me this swing right here, and I can get my stops down a little bit. They're thinking about it. Well, that's not very impressive, is it? So here we're coming back with now a number two signal. So I've definitely got myself jammed up here in a sideways trading range. All right, I'm going to get my stops in now. This is last chance for the sellers. If they don't pick it up at this point, then it's time to go. And believe it or not, we'll probably see the market rally. And there's a number two signal. All right, you know what? Forgive me for doing this, but I'm going to be looking to take the market higher now off this number two signal. Okay, let me get this going, and then I'm going to explain what's going on. Oh. Oops, sorry, got the wrong order canceled. There we go. Actually, you know what? Let's try to run this one out a ways, because we should see a break now to the top side. Okay, after all that mess that you witnessed, here's what's going on. Oh, by the way, we have hit our swing target. So there's over $100 sitting on the table there for you to take. Let's see if I can get this back to the median line. That'll be my big target. Okay, so here's what was going on. I got a little bit cute with the market trying to take that early trend change signal and the late filter entry signal in the Falcon. They were obviously both counter trend, and the market was in a little bit of a sideways mode. Bad idea to trade the market when it's sideways, but I thought I'd look like a rock star, catch this big move higher, and of course the market did not cooperate. After that, we got the breakout lower, so I figured, okay, well, we're going to see the with trend move, the with trend breakout from the trading range, and of course that didn't stick either. The thing is, when you have a trading range and you get the with trend breakout and it fails, there's a good chance the market will reverse and go the other way, which is why I reversed on the signal again, why I picked up on that number 2 signal. Now, you know, normally you don't see me trade this much. This is a rather active morning for me. So at least that trade, I got tapped at break even, which is a little less painful. Now we're going to get the trend change signal. We're going to get a number 1 signal developing here. And I'm debating staying bullish. We're still within the sideways trading range, which is problematic. The best thing to do when you identify a sideways trading range is just let the market get outside the trading range first. It will make your life so much easier. But hey, since when have I ever done anything the easy way? All right, so we've got the trend change signal building here, the number 1 signal. I guess it didn't print because the clouds weren't crossed over 100%, but the number 1 signal develops when the clouds cross. They change direction, so we went from a bearish cloud here to a bullish cloud. We get that pullback, and then that's the first signal that prints in the new direction. That's the number 1 signal. All right, I'm going to be stubborn again. Oop. I'm going to try to run this one out. See if we can't get it back somewhere around the median line, 7,800. Let's see if we can get it back towards 7,800. That was a pretty popular number yesterday and the day before. All right, so I got tagged at break even on the other one. Again, there's another $100 sitting there for you. So if I were smart, I could be up $200 already on those 2 trades. But I'm hoping this one has a little giddy up to it, and I may be able to offset my earlier losses with this one trade. And what I'm going to do is, if this bar develops, I'm going to trail my stop below any bar with a tail to it. And as we get close to 10 points or over 10 points on the trade, I'm probably going to trail bar for bar. Oh dear, this is why I tell you guys to take profit on target. Do as I say, not as I do. Come on, give me a couple of bull bars. Pretty please. Nope. Well, if nothing else, I've shown you the value of taking profit on target when you have it. Darn it. Okay, we're back to the hard edge. We're going to get the number one signal developing. We started so well. All right, well, I'm going to hold out now for a stronger setup. Which essentially means letting it get outside this trading range that has developed. So there's the breakout. We should have seen a retest earlier. The fact that we didn't get one, we could put our just in case order to sell below there. The market's very, very happy just being inside this trading range at the moment. The fact that there's no follow through makes me suspect there's not much in the way of volume behind these moves, that the market is running on fumes. I hate this. They're back down here. They're very likely to test the bottom end. Oh, good. There's a little bit of a reaction. That's better. I'm taking a bit of a chance trying to trade the breakout. The reason I'm taking the chance on the breakout is because we broke higher. There should have been a retest and at least an attempt to move the market higher, but there wasn't, which makes me think that there are no buyers, that the buying effort is non-existent. Yeah, see that? All right, this is starting to get a little bit more interesting now. We're still in the sideways range. We've made an attempt to move the market lower. We can't. Now we're making an attempt to move the market higher. If we get a couple of bars counter here off of the hard edge, we're going to finally have this market in a bit of a tight spot. And sure enough, here on the Raptor, we've got our number 2 signal. Okay, there's one bar on the Eagle. There's the second one. Okay, so I'm going to throw I'll do it here on the Raptor. I'm going to put my just in case order to buy. And what this is going to be a second push opportunity now on this number 2 signal. The second push simply means we allow the signal to engage. We see where the market reacts, and then we use that reactionary bar as our signal bar. All right, there they go. Well, there again, we've got my profit target. So there's 3 trades now, $100 each. And I'm going to try to ride the swing on this one, get it back here to break even. Come on, you guys owe me one. Hey, way to go, Ray. Ray said I took that Raptor number 1 signal to the short side, got my $100. I'm done for the day. Well done. This one should play out a little bit better. We've seen the market, like I said, attempt to move lower, attempt to move higher. Oh, don't tag me at break even again. Oh, I hate you. Shoot. All right. From now on, I promise I will take profit on target. I'm going to have to write that out on a blackboard 100 times. Looks like now this is the proper breakout. And here we're finally getting the retest. So I almost feel like I'm over trading today. We're getting so many opportunities. I should be a little bit more particular about which opportunities I'm chasing. I still like this market to the short side. That is the trend. And same thing, when and if I can get 2 bars counter or with trend lower, I will cover the buy side as well. And that's the only good thing about a sideways trading range, is that the market does eventually push itself into a corner. Okay, so I've got my 2 bars counter. I've got my just in case order to buy. So I got the market in a bit of a bind. I'll set my profit orders. I'll use my eagle targets, so which is 10 ticks. So I'll set a 10 tick to buy it back there, and 57 to 47.5. There's the trade. All right. So you could call this a second push opportunity on your number 3 signal, second push opportunity on the number 2 signal. I have dug a bit of a hole for myself today, though. All right, let's see if we get the follow through this time. Got to clear that darn hard edge. Well, the lack of market participation here this morning is crazy, except for the big move out of the gate. Well, I guess we did have a couple of follow-up moves, but it seems to have dried up now. Okay, a little bit of a pushback will eventually develop into a number one signal. we go. Come on, let's clear that first hurdle. $77.75 is going to be a little bit of an obstacle, very, very close to this price up here that we keep encountering around the 76 zone, 77.77, lucky sevens. All right, we're 3/4 of the way to our swing target. There we go. We just hit our swing target again. So another $100. What is that now? 3-4 times? But I will hold on for the eagle target if I can get it. Pretty please. There we go. Well, I guess it serves me right for trying to show off earlier instead of holding out for the real trade. Oh well. You're never too old to learn, right? Right. Just tagging the eagle target. What's happening here is we've got the trend change occurring. And so the clouds are crossing. There's going to be a pullback through here. Oh, actually, this might qualify, this little hesitation right here. The next signal that prints will be the #1 signal to buy. I just got a little bit ahead of the curve with this #2 signal with the breakout and the retest that I showed you here. So when you get the breakout, when you first off identify a sideways trading range, this is what should happen from a sideways trading range. There should be a breakout, there should be a retest, and at this point, you've got the market in a bind. At this point, you should sit up straight in your seat and pay attention, because from here the market will either continue lower with trend, or as it did today, it will fail and continue higher. So when you get that breakout and retest, that is an excellent opportunity. And the same thing's going to happen here to the top side. The market will get up here, it will break out or attempt to break out, and then we can see what it's going to do once it gets up there. This is why I kept trying to run my profit because I was expecting the market to retrace to the other end of the trading range, but oh well. Outsmarted myself again. Okay, there's that number one signal that printed. Pablo, great question. Pablo's, and I went over this a little bit yesterday, but I don't mind going over it again. Pablo's asking, what Renko bar parameters do you recommend for the S&P 500 and which ones for the NASDAQ? This is the question I probably get asked more than any other. When in doubt, go with the default parameters. I use the defaults for 99% of the markets that I look at. The exception, unfortunately, is the E-mini S&P. And bear with me a moment here as I build a new chart. If you're trading, the instrument you're following is trading at $10 a tick or less, the default settings should work just fine. The E-mini, of course, trading at $12.50 a tick messes everything up. You can do the same thing with the 30-year bond because it's more money as well per tick. Okay. So here is your E-mini chart. And the problem with the E-mini with the default settings is you don't get enough information. So for instance, here the market opens, we've got one trade so far in the E-mini. The E-mini naturally is a little bit more subdued than a market like the NASDAQ, but this is what you want to look for. You want to find your session end line, your day break line, and you want to scroll back through your chart and you want to see, okay, how many opportunities did I get? Well, right now it's not looking like very many, is it? And that was yesterday. Yesterday was a very active day. So compare that to the NQ, where we have a plethora of opportunities, and this is just from this morning's open. You can see I'm scrolling at least 2 or 3 screens, and the day's not even done yet. So obviously the default settings, they work okay for the NASDAQ, not so good for the E-mini. We're not getting enough opportunities. So what do we do about that? Well, we got to speed things up. And the faster settings we settled on were 4, 4, and 6. And I'll explain this to you in a second, but the easy way to remember that is the telephone prefix in Moose Jaw, Saskatchewan. See, there you go. Now you'll never forget it. Oh, Pablo, it's your first day. Well, welcome, and I'm sorry I dropped the ball today. I will do better tomorrow. All right, what you want to do is you want to go to your data series, and the default brick size is 8 by 8. Trend refers to the body size. Reversal refers to the tail size. So we're going to go with a 446 setting. So we're going to adjust our brick size to be 4 ticks. Now, when you start tweaking and playing with the bar sizes and whatnot, it's to your advantage to make the change dramatic. For instance, going from 8 ticks to 7 ticks or 8 ticks to 9 ticks is not going to do anything. So let's make it substantial. Let's make a big change. So I cut it in half. We'll go 4 by 4. We'll apply that. And oh, look, we're getting a lot more signals. That's looking better. We're scrolling through our chart. There's a lot more activity here. But wait, the chart doesn't look right, does it? The trading bands are all messed up. Well, that's because we adjusted the brick size. Now we have to adjust the Raptor as well. So we adjusted the brick size at the data series. Now we're going to go to the indicators, and we're going to adjust the Raptor. Now you can adjust your Raptor filter as well. It's the Eagle brick size, so we're going to make that 6 by 6. And then we're going to go to the Raptor itself. And on the Raptor, of course, we have the 2 clouds. We got the faster cloud and the slower cloud. So we're going to go 4, 4, and 6. So the slower cloud, we're going to make 6 by 6. And you can play with these settings, but this is usually what I default to. Then we're going to make the fast cloud 4 by 4. And the hawk brick, we're going to make 4 by 4. Now, if you want to make a note, this is the rough relationship between the brick size and the Raptor settings. The fast cloud is equal to the brick size. So if you have a 4-tick brick, your fast cloud will be 4 ticks. If you have a 10-tick brick, your fast cloud will be 10 ticks. Your slow cloud is 1.5 times the brick size. So if you have a 4-tick brick, you have a 6-tick slow cloud. If you have a 10-tick brick, you have a 15-tick slow cloud. The hawk bars are 3/4 of the brick size, 0.75. Now, if we have a 4-tick brick, I can't really take 3/4 of it. Well, I could. I suppose I could change it to 3 instead of 4. excuse me. But again, it's not going to, one tick isn't going to make that much of a difference. So I just stay with the default 446. But if I were trading, say, a 10 tick brick, then 0.75, well, you could either make it 7 or 8. All right, so there's the rough relationship of the Raptor and the brick size. All right, let's apply that. And voila, we have a normal looking chart and we have more opportunities. And we have plenty of discretionary signals, and we also have some of our high probability signals printing, which is what we want. When you've done this, do yourself a favor and save the template. Call it whatever, Fast Raptor or E-mini Raptor or whatever. So the next time you load a clean chart, if you want the faster settings, you already have everything all set up. So a review, when you open up your chart, if your daybreak lines look like this and you're not getting enough signals, that means you have to reduce your brick size and speed up your Raptor. If, however, the opposite happens and you open up your chart and you're getting a bunch of bars printing, so many that your timestamps are actually starting to print in seconds instead of minutes, well, then the opposite is true. You've got too much information and you probably need to dial it back. You probably need to go with a larger brick, but that's rare. Most times, in most instances, you're going to reduce it. Yeah, sorry about that, guys. I know a lot of you are try to mirror my trades. Well, I dropped the ball today. It happens. Only difference is when you do it at home, nobody knows about it. When I do it, it's on the internet forever. Okay, so here's our trading range. Close enough. Thanks for asking, Pablo. Those of you new in the room, please don't be shy about asking questions. That's why I'm here. I'm here for your benefit. If you don't know what's going on, chances are pretty good somebody else doesn't know what's going on either. Reminds me of my first day at university level math. Professors saying, okay, it's the first day, we're just going to review what you learned in high school, and I did not understand a thing he said. And I look around the room and everybody is writing feverishly in their notebooks, and I'm thinking, I'm in trouble. Only to find out that nobody else knew what he was talking about either. And they were just panic stricken and wrote notes to keep busy, I suppose. Well, in spite of the big move this morning, the market hasn't gone very far, really. We're retracing a whole lot of numbers. Here's the session on the day so far, relatively small, within yesterday's range for sure. You would have thought after such a strong rally day yesterday, the buyers would try to follow through with it, but apparently not. And things looking a little bit neutral around this 7,800 zone. We're not at 7,800 yet, but kind of poking around there. I still like the market short, given the way it fell out of bed, out of the open. Of course, as soon as I say that, watch it take off higher. All right, well, to finish out the morning, let's take a look as we retest the top end of the trading range. In fact, why don't I include that other little swing high back here? Well, we've got the breakout, waiting on the retest. I don't like to use just one bar for placing my orders. Two bars seem to be a little bit more reliable. Come on, you can do it. Things obviously slower as the market, we kind of get toward the end of the morning session. A lot of traders will be thinking about lunch. I don't have my second bar yet. I'm getting a little ahead of myself here. If this bar turns bullish, I'm going to have to cancel the order. Come on, give me a good retest. Oh, it's a game of inches for sure. Just need that. There we go. Okay, we finally got the extra tick. We were able to get the 2 bars to give me the retest. And now I'll be looking for the move higher to support the breakout. What do I want? I want, that's 2, I want 7. There. We're trading in slow motion now. If they drift back inside this trading range and say they get about halfway, well, then that kind of voids any buying attempt. It just proves that the market is dead neutral again. All right, there's 1 bar. Let's get the other one. There's 2 bars there. We got the market now in a little bit of a tight spot. It's proven that it can break out. It's trying to resume with the breakout. If it fails, it's going to head lower. The momentum has visibly waned. All right. Okay, now knowing this, I bet you we got a number 2 signal on the Raptor. Yes, we did. Look at that. Got a number 2 signal to go short. Oh, and boom! Down they go. And hooray for me, I actually took profit on target. Oh, look at that. They actually went a little bit deep. Well, that's great. That's how it's supposed to work. All right. Well, I feel a little better about that. Closing the session on a good note. All right, you guys, if you are going to continue trading today, well, the trend is down and it looks like the sellers are back with a vengeance. So you'll want to try to stay to the short side as much as possible. Try to leave yourself a reasonable stop. The volatility here today, very unpredictable. Okay, I will see you again tomorrow. We'll talk to you then. Bye for now.